Welcome to Exchange Rates UK TV. It is the 11th of January 2022. Taking a look here at basic attention token on the 3-week, weekly, and daily Ichimoku charts. On the 3-week chart, and I just got done doing polka dots. Basic attention token has enough data to have a full Ichimoku suite. So we're above the cloud on the 3-week chart, and the lagging span is an open space. So that's full on bull mode. No matter what the recent price action is doing, everything still looks very bullish. I mean, there are some hints that it could trade down a little bit lower because we are below the Tenkan Sen and the Kijin Sen, but that by itself doesn't mean much. There is a clear bounce off that 382 Fib retracement of the 3-week chart. Zip now, let's say zip. Moving on to the weekly chart. Now, the last week's candle closed, and it closed in a position where it triggered an ideal bearish Ichimoku breakout. And that still could play out, but the last time that there was a weekly bearish Ichimoku breakout, that was back in May of last no that sorry May of 2021. That was the last time there was that kind of a major type of move. But you look forward to it now. Look forward. Look into the future to where we are now. It's a little different price action. You don't see this really strong sustained selling pressure, especially over the last few weeks. I mean, it's still lower, but nothing that's really kind of screaming, hey, total collapse coming. It's still in the bull market within the RSI. 50 and 40 are the oversold levels. And then you have the composite index traveling lower. We don't have any hidden bullish or regular bullish divergence in here. The percent B did tick lower, and this we may be looking at a false Bollinger Band break south because the percent B is traveling above 0.2 now. But when we look forward on the daily chart, 3-week, weekly, daily. There it is. Oh wait, I was looking at the daily. There it is, the week. Oh my gosh, I thought that was weird. So that's the daily chart, and I want to get back to the daily chart on this bearish breakout. The reason that we didn't see the bearish breakout on the daily chart is on the weekly chart. When you look at it, Senko Span B is right here. Now, Senko Span B, that's the red part of the cloud. That's the red line of the cloud. Senko Span B is the hardest area to close above or below within the Ichimoku system. It represents the strongest area of support and resistance. And I think you're seeing a good representation of that on this chart, especially when you look back to the weekly candle of October 25th, week of October 25th, 2021. It required a very large candle to break above and then close above Senko Span B. And ever since then, Senko Span B has acted as a source of support for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, going on 11 weeks. In fact, the low of the current week is where it bounced off of. So how do we interpret what's going on here? Well, on the weekly chart, it's above the cloud. On the 3-week chart, it's above the cloud. The lagging span is an open space on both of those. Zip on over to the daily. Doesn't look like we're going to get a ton of bearish price action out of this on the daily chart. So what I'd be looking for here on the daily chart is I'd be looking for a bullish return higher. I'd want to see basic attention token move, not necessarily to a close above the cloud. I don't think that's necessary, but at least the lagging span needs to close in a condition where it is above the bodies of these candlesticks and an open space. And the earliest that could happen right now, today, would be at 119. But as you get forward onto the rest of the week here, probably need to see a daily close around 139 even. That would more than likely return basic attention token to a pretty prolonged bullish expansion phase once again. And that does it for me. Thank you for watching. Please don't forget to like, comment, and subscribe.